in crypto, I think we're spring, right? I think crypto winter ended on June 13th. I think we're in
Okay.
crypto spring, which will last through first quarter next year.
Okay.
And what does that mean, right? Well, crypto winter is where you go down a lot, right? And we went down, 70 something percent peak to trough.
Oh, yeah.
And we bottomed on June 13th. And now we've kind of bounced around the bottom here. And that's spring. Spring is, think about spring, right? It's cold, it's warm, it's windy, it's muddy, it's kind of, yeah. And so everyone's saying, oh, we're gonna have this bull market. No.
Hey guys, welcome back to Library of Wealth. Today we have American investor Mark Yusko on the financial economy, Bitcoin, and the future of crypto for 2022. Yusko says that the crypto winter has ended and everything is starting to increase. He says that the system currently has an excess degree of stupidity and leverage. Currently, a lot of individuals are having their Bitcoin confiscated by businesses who overlend, while guaranteeing a higher rate of return. According to Yusko, the majority of these business models have been eliminated from the system, but some have persisted. The higher highs and the lower lows in the charts indicate the start of an accumulation cycle. Let's listen to this interview with Mark Yusko as he gives us his take on the financial market and the future of cryptocurrency. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
Well, no, look, we got a taste of it on Monday and Tuesday. So,
Yep.
what I said in the clip was that at some point, right, the Fed is going to realize they've made a terrible policy error. I mean, this will go down, when we look back in history, this will go down as probably one of the three great policy errors in the last 200 years. I know, big statement,
Right.
but we didn't have a central bank in the 1840s, but the national banks, actually, we didn't have a national bank either. We had state banks back then. We were in the free banking era. But the state banks kind of collectively made probably the biggest policy error and plunged the country into a pretty significant recession. I mean, depression that no one ever talks about because it was back in the 1800s.
Right.
Then we had the second worst set of policy decisions, which would have been in 1930. And that was a combination of Congress, Smoot and Hawley, dumb guys that passed tariffs. Tariffs, never a good idea. Never have been, never will be. Adam Smith was right. Comparative advantage and free trade and globalization are all good things, not bad things. And then on top of that, the Fed, which had just been established probably 15 years earlier, 17 years earlier, decided to tighten into a recession and turn a garden variety recession into the Great Depression. 1931 was the worst year in equity markets, not 1929 or 30, 1931. And so here we are again, 90 years later, and it's always 90 years. There's this
Right.
90-year cycle. It takes a full generation for people to forget. And so here we are again on the verge, and not even on the verge, we're in a recession.
Yeah.
It's like a modest recession, like a 2001 recession. It's not the end of the world recession. But the Fed, I believe, has made an epic policy error by over-tightening and exacerbating the problem. And it's not just in the US. I mean, it's everywhere. Every central bank in the world has decided to try to defend their currencies, except the Japanese and the Europeans. But that's another story for another day. But look, what I was saying was when the Fed realizes the error of their ways and they hint, they don't even have to do it. All they have to do is hint that they're either not going to raise rates or they're going to get back on the QE train, which they will, right?
Mhm.
Japan said they would stop QE in 2008. They're still doing it today.
Yeah.
Once you start, you can't stop. It is impossible until you do a debt jubilee. So once that pivot happens, the Powell pivot, as I refer to it, there will be a face melter of a rally. And I said, we saw a hint on Monday and Tuesday. We saw
900
back-to-back
points.
3% up days.
Yeah.
And it's just short covering. All it is short covering. We have companies that are down 90, 95, 98%, and everybody's short. And if those things have to get covered. You go from 2.5 cents on the dollar to 5 cents on the dollar in a hurry. Now you're still down 95% from a year ago, but you could have a really material rally. The problem is those are bear market rallies, right? There's never been a 4% up day in a bull market.
Yeah.
And it makes sense, right? A bull market is a market that goes up most days, but goes down sharply on bad news or perceived bad news. Okay. A bull market is a market that goes up most days and goes down sharply on bad news or perceived bad news. So what we had is a market that goes down most days since last November. And we had this good news or perception of good news. We didn't even actually have any good news. There was an emergency Fed meeting on Monday.
Right.
We didn't hear anything about it. They didn't make any declarations. They didn't say they're going to stop raising rates. All people did is say, well, Credit Suisse was on the verge of bankruptcy. Deutsche Bank on the verge of bankruptcy.
Right.
So clearly the Fed must have decided that they're going to ease.
Something's up. Yeah, something's up.
They didn't say that. But the market didn't care. They didn't wait around to hear. They just started buying.
According to Yusko, all economies and markets will crash as soon as the system's supply of free money is exhausted. Yusko says that inflation is a fallacy that benefits only those at the top of the pyramid. We have the highest wealth and income disparity in the world because the Fed has been gradually removing money from the general public and giving it to the wealthy.
When I'm talking about the face melter, I'm really talking about equities, right?
About what?
I think
Repeat?
Equities, the equity markets.
Okay, all right.
In crypto, I think we're spring, right? I think crypto winter ended on June 13th. I think we're in crypto spring, which will last through first quarter next year.
Okay.
And what does that mean, right? Well, crypto winter is where you go down a lot, right? And we went down, 70 something percent peak to trough.
Oh yeah.
And we bottomed on June 13th. And now we've kind of bounced around the bottom here. And that's spring. Spring is, think about spring, right? It's cold, it's warm, it's windy, it's muddy. It's kind of, And so everyone's saying, oh, we're going to have this bull market. No. The thing about crypto, the reason sentiment's so washed out is Bitcoin is the cheapest it's been other than 3% of the time, right? In only 3% of 14 years has Bitcoin been cheaper relative to its history. So that's why people are so unhappy. Now, the markets, on the other hand, the equity markets are still, despite being down 21% year to date, they're still in the 93rd percentile expensive. Stocks could fall 50+% just to get back to fair value.
So your theory is that possibly the stocks go down, Bitcoin holds? Is that what you're thinking?
I absolutely think that could happen. And why? The reason, if you look at the history, 14 years of history, Bitcoin is 0.0 correlated to bonds and 0.15 correlated to stocks, meaning the directionality of one has nothing to do with the other. 0.15 is a really, really low correlation. But everybody says, but Mark, November to June, it was 70% correlated. Yes, it was. Because what was November to June? November to June was one of the great liquidations of leverage that markets have ever seen. We had the most leverage in equities in history. Margin debt was the highest it had ever been. And we had the most leverage in crypto. Michael Burry pointed this out actually a year ago, February. So he was way early to say, look, there's just too much leverage. In a liquidation, right? When Peloton goes down 95%, and you get a margin call because you bought Peloton on margin, you don't get to sell Peloton to pay back the margin because it's not worth anything. You have to sell bonds, cash, gold, Bitcoin. So what happens in liquidations, go back to March 2020, everything fell. But then Bitcoin rallied really hard off the bottom, up much more than stocks. Why? Because it's uncorrelated over the long term. But in those short windows of liquidation, where the leverage was coming out of the system, people have to sell what they can sell, not what they want to sell. And that's why bonds did so poorly. I mean, that and rising interest rates. It's why gold has done so poorly. Everybody says gold's supposed to do well in a recession. Well, it normally does, unless you have to sell it to pay back your margin debt, which is exactly what's happening.
Yusko says that the continued negative sentiment, which results in more volatility, is the reason why it's still crypto spring. Many people were unable to purchase Bitcoin this year because they lacked either confidence, guts, or money. He says that when compared to 3- and 4-fold assets at the bottom, Bitcoin and Ethereum are easy. Yusko asserts that we will soon start to inflect and that the system needs greater newcomers and adoption. According to Mark, people need to grasp that cryptocurrencies are the financial system of the future and our generation's greatest potential for wealth development. What do you guys think about Mark Yusko's opinion on crypto being the future of money and how Bitcoin will play a role? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.